Here we go. This is Creativity 202. I believe it's lesson 27B, the second part of creativity being transitioned into innovation. And this is the Sunday morning conversation group. Welcome, everybody. And we could start with a check-in and then suggestions for what we do.
Sure.
Who would like to start with a check-in?
Oh, I can do that. I can let you know that the neighbors tried to blow up the neighborhood last night, but we all survived. And I think twice a year that we go through that, July 4th and New Year's Eve. But everything is pretty good here in St. Louis area. Weather is just gorgeous, man. It's really nice. I think we have today and maybe tomorrow, and then it goes back into winter. So so all's well in my part of the country. Aho.
I'll jump in, I suppose. I'm Dan Bloom, and I've been on the Monday class normally, but now I'm in this class. And like Ernie, I'm experiencing some warm weather here in Silver Spring, Maryland. Of course, it won't last, being January. Had a quiet evening. My party for New Year's Eve having been the party the night before. So I'm fine for talking today, and it's been a pleasure getting to know the Euros, even though a lot of them are actually here in the U.S. at the moment.
Ken is coming.
Oh,
We're just
Hey,
doing
Ken.
check-ins, Ken. And you're on mute.
I was in the wrong room. Where everybody was. Said, maybe
Were
they
you?
were wise, and maybe we'll defer a week. But good. Well, everything's okay here. The first morning in almost 2 weeks, I felt somewhat human. I'm almost over this upper respiratory, which is a better way to start the new year. But looking forward to your stuff. Who's Tom? Do you got the comm?
I got the recording, yes.
Good. I'll let you go ahead and run the session,
Okay,
and
thank
I
you.
will listen carefully.
All right, thank you. And Chun Long, you want to check in?
Yeah, everything's good here. So especially the weather is really nice. Yesterday we went out Costco shopping. We have above 6 degrees and the sunshine. Really like it. But our coldest day will be in February, not in January. So we have a lot to go yet, I hope.
And Kyun, how are you today?
Yes, I'm good. Thank you very much. Good to be here. Happy New Year to everyone. In London here, it's kind of mild as well. Yeah, but it's gone dark already. So, aho.
Well, in Boise, we've got clouds, a bit of an inversion, normal for this time of year. So I'm hoping for the sunshine to poke through a little bit later today. And, we'll transition into the true storytelling space. Let me just know if you can hear these chimes. Little loud, sorry, Ernie. I'll hold it away. The musician sound is working. And so now here we are, and I'll offer a talking stick. Chun Long.
Good morning, good afternoon. Follow my usual way. So my Where's my stuff? Okay. It's coming. So what of last 2 weeks is a process. What I did, I took a whole week to relearn a swing trading strategies. Try to improve it by adopting some learning I have learned from Ken. Tried to set up a stock chart scanning. Tried a lot of things from stock charts. Get some success. Actually, the screening did very well, but it took me a week. Try to understand the value of every rules behind the system, versus try to trade mechanically. I learned that system, back tested, traded, but just mechanically. This time I try to understand every rule and what is the value added to my trading, or what is useful, what is may not be useful. Meanwhile, I reviewed Ken's triple screen system. When I do my relearning of the system, I think about my rules, and then suddenly remembered there's some good learnings there. So I reviewed Ken's notes about triple screen. I actually get a lot of good idea from that system, and try to adapt the triple screening system to trade some momentum stock with good earnings that the stocks especially provided by Mark Bushy. I still receive daily update. So what I try to do, use triple screen rules, create a special list, which is momentum stock with really good earnings. Then I take another week to review what I learned from Mark Bushy. This is my second time to review that lesson again. Actually, the 6 days workshop, just halfway. Just try to understand better about market type and the inflection points. I didn't trade for 2 weeks. Last 2 weeks, I just watched the market develop. That's it. So next 2 weeks, I think I will revise my annual plan, quarterly plan. Will be get some creative way to learn more. Also need to think my cost, do all those stuff. That's time. My cost is the time. So this morning I read the 10 maths of creativity. One thing I learned from that reading is creativity is something new that works. It's not a math. That sentence helped me to understand how to make my learning more useful, make my learning worse. That's what I did briefly last 2 weeks and this morning. I didn't do much about the lesson 27. Read it twice. I didn't do the exercise. I hope.
Ernie, you're on mute.
There. Sorry. Let's see. I did well last week. It was really interesting. I had a lot going on, and our the schedule was a little off, and had a lot going on here at the house when I'm trying to do the presentation, and I really botched it. Whenever I listened to it again, it was like, boy, I did a bad job. So I'm really kind of glad that this is part two, get a chance to redeem myself a little bit. But I did think about it, and I'm thinking, well, I don't handle chaos very well, and I probably I wish I had been better organized or something. But my investing is the same way. Well, and there's a lot going on. I really have to just step away and say, this is not a good day to do that. But so that was an interesting lesson for me anyway. And seeing it from the recording, it was a little embarrassing, but that's okay. I get another chance. So part two, this was great. I thought it was interesting about Leonardo da Vinci and the helicopter. I really like that story. I uh, didn't realize that he had done that. And I was thinking about whenever I was growing up, I had a 51 Ford that I had when I was in high school. And I use my creativity a lot to keep that rascal going. The hose would come off, I was carrying duct tape in the trunk and old hangers and a pair of pliers so that when the hose would come off, I could stick that thing back on and keep it going. And then it was had a clutch, and there were times where the starter just wouldn't work, and you had to push that thing and then pop the clutch and get it to going. And so I really used my creativity in high school just to have transportation and getting that going, which really worked pretty well, except I was not, it wasn't a good impression for dates, because you can't ask your date to help push it off, and after the movie. And if it's raining, boy, it's really terrible time to have to do that. But I did, it made me, going through the lesson, trying to figure out about what, creativity and doing things. It was interesting to think back about high school and doing that. I thought the trader exercise for me, talking about the sniper mentality, and I have to say that what it does for me when I think about it, I would think that I like the sniper mentality. First of all, it's an individual thing, and the person that really evaluates your work is you as a sniper. You don't have to go to be evaluated once a year, like whenever we were working, have other people judge your work. I think the sniper is probably his or her own worst critic, and because of what's on the line, and what they're doing is such a serious thing. And I think that I like the idea of viewing trading as a sniper, because you're going to be your own worst critic. What other people think of you as a trader really doesn't make any difference. And you're going to be the one to decide, did you do a good job or not? Plus, you're going to, as a sniper, the preparation that a sniper has to do, it's not just an actual sniper. Probably you're going to start with the weapon that you have, the bullets, and then your development's going to continue on. You're going to start thinking about the trajectory, the distance. You're going to get into the math. And probably one of the biggest things is you're going to start taking care of yourself physically because of the work that you're doing. And that applies to what we're doing as traders. We have to stay on top of our game. We have to be alert. Like I did in the last session, I was a mess, and I wasn't focused. And so the focus that a sniper has is just so intense. And it's just fascinating for me to think about what the sniper has to do their job, and what we do is trying to be a trader. And I think one of the interesting things, a sniper is kind of being sneaky. You don't know that the sniper is out there until they're taking the shot, and the sniper goes from being the hunter. Once they pull the trigger, their role switches. They almost, in a lot of cases, I'm sure, they go from being the hunter to the hunted. And so now they have to adapt. They have to be ready for anything. And so I really like that idea of the sniper mentality and applying that to our trading. And I just think there's a lot of things that I haven't even thought of that really that applies to that. So I'm really fascinated by that. And then the other thing I thought I would share, I haven't talked about my trading very much, but I have really been working on that, and I'm looking forward to the new year. And I really like the PSAR. I've been fascinated by that, and I've really kind of gotten into that. One of the things that I've been doing in the past month is I took Jeff's course that he and Bill Scheid had, and I thought it was really fascinating, but I'm not really into the cryptos, but I felt like it had applications to non-crypto things. So what I had been doing, I think there are about maybe 7 or 8 stocks that I really kind of worked with in the past year, and I was applying the PSAR to that. I have a software that I bought, Edge Raider, and I've been doing the back testing with that, and it took me a while just to learn how to do that, but I think I've kind of gotten into that. And so I was back testing some of the things that I had traded last year, not successfully, not that successfully. But I was doing the PSAR to my stocks, and it works to an extent, but the thing that I really liked about it, I would say it was close to being average. There was maybe 2 that were not so good. The other 3 did pretty well. And the thing that I noticed, or that I was struggling with, is that as I back tested, I have to, for me, I could come up with going into it, when the PSAR flipped, and following it with the PSAR. And then the thing that was interesting, that the PSAR would, go the other way. And so now I would stop and reverse. So I'm thinking, well, this is sort of average, but it's not, because the thing that whenever I'm following the trade and using the PSAR, I don't necessarily get out whenever had to put in a limit. You're going in there, and I'm gonna say I can't just arbitrarily came up and said that my stop would be 2%. If I go in, drops 2%, get out. But I really wouldn't do that in real life, because I'm shooting for that no lose dinner for 2. And to me, that's a key to the whole thing. I never used to do that. And now that's my first goal. Whenever I get into the investment, I'm shooting for that no lose dinner for 2. That's the thing that I'm really concentrating on, and hitting that. And then once I get it, now I go to the next level and lock in that no lose dinner for 2, because I'm going to walk away from that. Well, doing the back testing, I can't do that. So to me, that's an advantage that I don't have in my back testing. And then I'm also going to start moving my stop up as time goes on. So I'm not able to build that into the back testing. So there's a lot of things that I don't have in the back testing that makes that more advantageous to me, in my opinion. Now, I may work with that for a while and find out that I'm wrong. But to me, I feel very comfortable about that there are some things that I can do live, I guess you might say, rather that the back testing wouldn't catch. And so I'm really feeling even better about the PSAR. And then later on, as the time goes on, in my investment, I can realize that if there's a jump in the price, I can get out, take advantage of that the back testing, the mechanical system really wouldn't do. So I know that I can trade better than the back testing. So that's what I've been doing now is going through the signals that I've generated and just sit down with the charting system and then just follow it and say, okay, what would I have done in this situation? And I can come up with a better result. So I'm really encouraged by that. And I'm looking forward to trying that for the next few months and seeing how that affects my trading using the PSAR. And I'm getting really comfortable with that and feeling that it's a nice thing to do. So I'm looking forward to the new year and playing with that in my trading and continuing on with our creativity course. It's really been great. So aho.
Cute.
Well, just to start off with, only thanks to that. But I don't know if you're being a bit hard on yourself. Because I don't remember. I thought you did fine last time. So just take that away. Be a bit kind to yourself. I like trading as well. Anyway, so so my words, to start with the word from last time. So it was GOAT because it was off the back of Argentina being world champion and Leo Messi. And then at that time I was probably just didn't have enough concentration left to think of a word that tied in with the lesson. But anyway, I kind of reflected on this word. I mean, GOAT as in greatest of all time. And in the aftermath of obviously the of Argentina being world champion, I know in these days of social media and everything. I mean, there's really been an endless number of clips coming through. If you're ever on social media of Argentina, of this, that, and various reactions of the coach, of so many things. And and one of the questions that keep coming up is can we now settle the question that Leo Messi is the greatest of all time? And I started wondering if that's actually the right question. I mean, do we ask whether Monet is greater than Picasso? I mean, is it even a valid question to ask? And how do you determine what is greatest of all time, right? Are we using some metrics? What metrics are we using? And Leo Messi certainly has won a lot of trophies, a lot of medals. You know, is he greater than Ronaldo? Is he greater than Maradona, for example? Maradona hardly won much in terms of medals. And of course, sorry, now Pele has just died a couple of days ago, and then you can bring that into the equation. How do you measure that? And it struck me like I was just thinking maybe what about a qualitative measure? And kind of my mind went to, I think it was a Spanish artist. I can't remember who he was. I mean, he might not even be very famous, but I think he painted on the mural or wall about Maradona, and he wrote there. He said, "What is important is not what he did with his life, but what he did for mine." And I was kind of thinking, maybe it's have these people enriched our lives? Is this the way probably to look at it? It's if you enjoyed watching Messi play, I mean, that's great. Enjoy it. That's enrich your life. If you enjoy watching, Cristiano Ronaldo play, enjoy it. It's enrich your life. It's great. Don't just say which gave me more pleasure. I don't know. I mean, maybe sometimes someone would give you a bit more pleasure than the other, but I don't know whether this greatest of all time thing is the way to look at things. Just embrace everything, enjoy the goodness of it all, I think. Anyway, so that was my tangent for today. regarding the lesson, yes, I actually went through it, and it's as usual, really, really, really good for me. Very informative, very instructive. Picked up so many things. I'll just go through some of the notes I kind of wrote down from the lesson. I mean, the Leonardo da Vinci and the helicopter. Wow, that's a fantastic title. It's just like it's a bit weird. Leonardo da Vinci helicopter at different times. But yeah, so some of the things like ideas fail and fail and fail before they succeed. I mean, that's just great, you just got to realize that things fail. I was brought up in the kind of culture where you got to pass. Failure is not it's not for you, especially in school. We were taught that in school. So I really needed to get rid of that mindset, about failure is bad. So that's really useful for me. And this one, any idea can be made to work with infinite time and resources. I thought that's so true. Another one, this one really struck me, is it's a fast test multiple ideas at once, so we can, just get on with the testing and do multiple things, so you can find out quickly whether they actually work or don't work. And personally, I think for me is in terms of my journey on learning Ken stuff and the trading, and I think that it's not always just testing one thing at a time. It's almost impossible to do that, because if I'm learning to trade the pattern, the PSAR flip, for example, but in order to trade it, I also have to make a decision about my risk box. And together with that, I have to decide on the position sizing. So I'm in fact testing all three things at one time, because I find that the risk box will have an impact on the size of the risk box has an impact on whether I get kicked out too soon or whether I stay in too long. And then the position sizing, it's more a psychological thing at this stage. It's whether am I comfortable with $100, risk? 150, 200, 500? What makes me tick? What makes me uncomfortable when you're getting to that point, so that I'm not in the zero state anymore. So I think so all those things, in effect, I'm testing, and sometimes it's a bit uncomfortable because I just want to isolate everything just to test that one single thing. But I think that's not really doesn't work that way for me anyway. So that was fast test multiple ideas. And the other thing was we need to ensure that the ideas are all fundamentally different. I kind of pondered that, didn't really get too much into it. I thought it's an important point, but didn't really get too much into it. And this one really kind of, the next one is really gets me, is let me just see if I can find what it says there. And the ideas will also all fail in the same ways. I'm not quite sure what is meant by fail in the same way, and why do they have to fail in the same way? Can't they fail in different ways? I mean, if you're thinking of a car, you're testing the wheels and you're testing the brakes and you're testing the steering, they don't all fail in the same way, do they? I mean, okay, if the car crashes, then I guess, and they're all contributory factors, then I guess you can say they all fail in the same way, but surely there must be something different. Anyway, that's one that I made a note of and kind of park and ponder. That was it for the lesson. I'll just kind of move on a little bit for the exercise. Did exercise one, or tried to do exercise one, and so I had what was it? One of the things I was gonna test, I think, is chart scale and chart clutter, to see if I actually needed all the things that was on my chart, and whether it would help me if I kind of reduce. I think less is more. I think that was on Ken's write-up. So I've been testing that. I've actually cut down on the river top and bottom, and the Z2. I think it kind of helps me. You don't have more clutter, but still remains to be seen. I'll be doing just using without trading without those for the time being. And I think this other one, then do I have a plan for when I go down -1 or -2 in early trading? I think again it was prompted by Ken's notes, and well, it was partly prompted by Ken's notes, but I was actually thinking about that already. So, I need to sit and work through this just to figure out, where do I put my kill switch really? Is it for the day, for the week to date? Some of the questions are how many failures in a row before I stop for the day? How many hours before I stop for the day? Or maybe I don't count the hours until the end of the day, and maybe it's you keep a week to date thing. How many hours do I go down before I kind of take a break? How many trading days to do I go before I stop if I have a bad run? Anyway, these are just some of the questions I need to work through next week probably. That was exercise 1, and then the traders exercise about adopting the sniper mentality. Just quickly go through the questions. What could a bulletproof sniper mind do for you? I think it'll be it's a zero state if you have the sniper mind. I think it'll be in the zero state when you're trading. There's no fear, there's no greed. Just trade the patterns with standard work, with a kind of calm mind, and just kind of execute with ruthless efficiency, really. What are the qualities it represents? I think it's psychological strength, confidence in your own abilities, because a sniper has trained for a very long time, honing his abilities and his marksmanship. And then there's clarity of mind, as he's watching, waiting to pull the trigger. Flow as well. What kind of training and trust goes into the sniper's judgment? A lot of training, thousands of trades and prior practice, to hone the skill to an advanced degree, I think. Why is the sniper so powerful? Okay, skilled craftsman. I wrote down skilled craftsman that you can trust to execute at the highest level of his abilities. It's what I thought of that. And what does singular relentless focus mean to you? So I broke this into kind of the bigger picture. I think that's being clear about your goals, your smart, SMA RT goals, and pursuing them. And to do that, you actually need to learn how to have and maintain the motivation to pursue them. And then on daily trading on a smaller level, it means a lower level means to focus on the patterns and enter, exit, at the most favorable point. Again, I've been trading the pizza flip, but there are times when I realize that if you leave it for a few pieces, sometimes you're not entering at the lowest risk point, and then it runs away a little bit, and it's time to come back. It's a lot of practice to kind of identify that and learn to do that. What was the next one? Feel the silent mind communication. Okay, between you, and how does it feel when he's on your side? Great. I mean, calm and confident, and someone who's so competent is on my side. So I think that's great. What could a bulletproof sniper mind do for you? Well, I think it'll help me to stalk and execute with no fear and maximum confidence when entering the trade or when exiting the trade. So I'm just going on a bit. Just finish up with a few reflections and the things that kind of aha moments. I think trigger squeeze. Okay, that's from the diagram. Trigger squeeze. That's when I see the pattern. Actually, it's funny because last week I wasn't trading, but I was. And Chandong, when we were talking, I was having all the charts on, and I was just looking at them, and then I see these patterns come up. And I was like, I need to, it's like almost I have to jump in and do it because I see the pattern. And then I reminded myself, hang on, your plan was not to trade and just watch. So now I'm at the point where, I think I haven't even done 500 trades, but I've done enough times just to kind of have kind of a reflex action when I see the pattern, the P-star flip and the pattern come that I want to do something. But I think one of the big things for me last week was, is this in the don't question his judgment. And I was rewatching lesson 18 as well, which had the video about the most important moment in a trade, I think. And in there, I think Ken was talking about do not doubt your team. What they did is always is right. You can have confidence in your team, but don't beat them up. Don't beat them up at the time. Don't second guess it. Oh wow, this just was a minus 0.5 R, so my entry guy didn't do his job, or my farmer didn't do his job. I find that that's not really helpful. At the time, you got to have like 100% confidence in the team, and it's like if you're working physically with a team. I think if you say, "Hey, great job, guys," that gives you a very different feeling to, no, we messed up again. That wasn't really great. I got to do better next time. I think that for me, that doesn't really work, but a great job that definitely, keeps me motivated and going to go ready to go again. That's not to say that we don't, review and assess, because but that's for afterwards, not in the moment. It's like a match, really, a football match, soccer match. You're not gonna, if you go 1-0 down, you're not gonna beat up your team. I guess some coaches do and it works, but there's also a way. Also, they'll say, okay, what can we do here that can help us to get a goal back, or change the tactic and kind of take more control. I think that's quite important. Yeah, and the last one, fail properly. I wrote down. Don't even know where that's from. Maybe fail properly. I think if we set this as a goal, I wrote that we are testing out various approaches, then I think psychologically it also helps us to keep motivated as we go through, the testing or doing our trading. If you're practicing like me or learning. So when we fail, we succeed. As there's this lesson is saying, maybe you want to test it so that it fails. So yeah, it's important, I think, to maintain motivation, to keep progressing, to keep improving on the journey to become a skilled trader. I'll end with that. Aho.
Dan.
So I'm really enjoying this session. It's great to not be trying to trade in isolation, but to be part of a community where people are, working on the same kinds of problems that I am, and that I'll just say in my work in progress that I have my ups and downs. I had an up when I got to the point where I was trading $10 for R on every trade, and I felt comfortable doing that. But then had some downs from there, and for the intraday trading, I've gone back on the simulator temporarily, or maybe I'll go back to the one share. But on the swing trading, now I'm forging ahead, and swing trading was more my objective to begin with. Although I still want to be able to trade like Ken, and or Woj, or some of the people that post these 5R and 10R days with sniper trading. That just seems really cool. But in the meantime, perhaps I could be successful with swing trading, and I'm working on that. I didn't get to the latest lesson, 2027. I'm back on the previous week's lesson, But the thing about that lesson, which was honing creativity into innovation, part one, was that it was sounds like it was pretty similar to what we were talking about tonight, and it was also very good for me. The message of fail fast, fail often, fail forward, fail by design, fail in order to learn, and then to add on some of Kuhn's excellent comments. We didn't fail, we succeeded in the big picture, in the longer term. That's what I really need to hear as an INTJ that tends to want to try a lot of things. I love the idea of trying, many ideas quickly in order to pick my future focus. So what I really liked about the lesson 26 that I worked on was the methodology, where you look at ideas and how they could fail and how you could test it. It was just a nice thought exercise that you can do. It doesn't take a long time. It doesn't cost anything, and then you can start working on it, which takes longer. But in the meantime, you're able to do other similar exercises. So I applied it once to one of my perennial interests, which is to try to time the bottom of the bear sideways market and get into the future bull market early, whenever that time comes, and how maybe I could use the ETF2 methodology as a way to kind of always be in, at a low level of intensity, position size wise, and then quickly ramp up from there. And I didn't get quite so far as to know how I would quickly ramp up, but I did get so far as to determine through this exercise that perhaps ETF2 was a better bet than some previous approaches that I'd been banking on. But the one I want to talk about today is the applying this lesson to the problem of how can I increase my swing trade expectunity. That's a Van Tharp term, expectancy times the number of opportunities you actually capture, and get into more trades instead of hesitating like I so often do. And what I've found in the intraday trading as well as in the swing trading is that you often only have a few seconds to get into your trade after the stock triggers, whether it's up or down, especially since I'm tending to want to trade higher time frame breakdowns or breakouts on the swing frame or on the intraday frame. And so even more, when you get to that break, if it's going to go, it tends to go fast. And when it retests, you may still be able to catch it on the retest if you miss your stop limit order and you get your limit order. But you're less likely to be able to get no lose plus dinner for two if it's ultimately going to fail after that. You may have missed your no lose plus dinner for two if you missed the stop limit order. And I've been dealing with issues like that, trying to understand what would be the optimal way to select and get into these trades. So that was the problem I worked on. My first idea was, well, use the stop limit order. I could do the swing frames overnight or over the weekend like I did this weekend that was on the tape with Ken and I last night, holding down New Year's Eve. I do that, as often as possible, certainly over the weekends. And then, I had 5 pretty good candidates this weekend. I put my stop limit orders in 1 or 2 ticks below the break line in the pre-market so that they're there on the open. And then I leave my order open during the session to guarantee entry if the play triggers. Okay, so what could possibly go wrong? This fails a number of different ways. First of all, my rules say that I can't have 5 open without having gotten no lose plus dinner for 2 stop in on them. I can have 2 open in max of 2 open long, 3 if I've also got a short to balance it. That's what my rule says. Also, even if I didn't have that rule, if I went like the airlines where, I'm selling excess seats, hoping that some of them will cancel, and all my stop limit orders in this analogy are like the seats and they don't all fill. So I put in 5, hoping I'd get 2 or 3, and that they'd be mixed. One of them would be long, one of them would be short. Well, it might not work out that way. I might just get 3 longs or 4 longs or something like that. And also, if I do it this way, during the pre-market, I can look at the futures, but I don't really know what the market context is going to be. I could get in on 3 longs, and then the whole market decides to go south, and now they all stop out. So I could get a little bit of correlation risk by overbooking my trades. Other things that could go wrong with the stop limit order swing trade method is if price gaps over your stop limit and never comes back, then you never caught it. Also, if price gets too volatile or the market context is unfavorable, what if I left the stop limit order in there and went off to walk the dog, and an hour or 2 later I come back and market context is completely turned around, and I would have been better off waiting, maybe I would have been better off canceling the order rather than leaving it there to later trigger at a time when, I don't really want it to trigger anymore. Now maybe I'm second guessing my trading setups a little too much, but still, these are plausible failure scenarios. So I come to my idea number 2, which is to place an alert a few ticks in front or in back of the break line. So I'm going to pre-frame my entry, my stop, and my position size so that hopefully I'll be able to get this order in really quick when the alert triggers. And I've seen, if I've been watching or if I have time to look after I get the alert, I've seen that the chart still looks good. It didn't go back and violate my risk box and then come back and look for my stop limit order. And I might or might not want to take a crazy thing like that. Or maybe the market context isn't favorable anymore. All I have is an alert, so I don't have to put an order in if it is apparently a bad idea. But by the same token, here's how this is going to fail is what if I'm walking the dog? I'm not there to get the alert. What if I've got, I'm even trading, so I'm even at my computer, but I've got a span of control issue because I've got other trades I'm managing or distracted or whatever. I don't even get to the alert, for a minute or 2, and that's probably too long because, as I say, these things tend to move fast when they do get ready to trigger. So that's how this is going to fail. So obviously, fearing this, I'm going to hurry to put in that order. What if I make a mistake? Now, hopefully with practice, I make fewer mistakes. That's why I'm trading small R, to get that muscle memory, that unconscious competence. But just thinking about some of the failure modes. So then I came up with idea 3, the mixed approach. And that is any morning I'm going to trade, make it mandatory to put in 1 or 2 stop limit orders. If I have them framed, then my trading system says if I didn't put them in, I made a mistake, and I got to put that into the spreadsheet, and I got to put that into the daily debriefing, and that's going to lower my trader quality number, which I don't have yet, but if I did, it would do that. So it's going to be mandatory to put in 1 or 2 stop limit orders, and then I'll put alerts in for the other 2 or 3 frames I've got. After the open, I'm going to periodically check the stop limit orders that haven't triggered and decide whether to keep or remove them. Now, if it's one of those mornings when I want to go to the dog park at 10 or 10:30, or I have a meeting or something, then I have discretion to remove those stop limit orders. And then for the ones where I put alerts, of course, I have to handle them like we talked about idea 2. But this way I can be kind of selective about when I use alerts and when I use stop limits. And hopefully I'll get in more stop limits, but just the good ones, not the bad ones, if there is such a thing as a bad one, which I hypothesize there might be. Now, what's interesting about this is by the time I get to idea 3, because it's a hybrid approach, I've kind of got a decent chance of taking the advantages of idea 1 and 2, and I've hopefully eliminated some of the disadvantages. And so I am effectively down to the point where I'm focused more on the process than I am on, a single idea. And that's where we think about how to test this according to the instructions in our exercise. So couldn't think of any way to backtest this. Backtesting is an area where I still need to do pretty much a lot of development someday. But I can certainly test it in action and through low risk trading and through hypothetical chart watching and all that kind of thing. So what I thought was I could collect the usual telemetry from my actual trades. If I did a stop limit order, now I'm going to put into my spreadsheet where I track my trades, whether I entered on a stop limit, whether I entered on an alert, whether I entered on a limit. Well, I never enter on a market, but I suppose I could. Let me put what kind of order I got in with, and then I can go back after the fact and over time kind of get a sense for which type of entry is more generates more opportunities and generates better results. How often did I miss trades because I had an alert instead of a stop limit? How often did I get into a trade I wish I hadn't because I had a stop limit instead of an alert? That kind of thing. The other thing, since it's swing trading, I might be lucky to get a few trades a week. It's going to take a long time to test that way by collecting telemetry from actual trades. So what I could do is I could, as I'm kind of doing my framing anyway for the next day's trades, I could look at trades that would have resulted with the movers that weren't on my list the previous day. I could look at the reads list that I have, much like Shung Lung described. I could look at the Dow 30. I could look at kind of my longer list of stocks from the Ken's Daily Report that hadn't made my cut for the swing trades. And I could say, well, you know what? I wish I'd got into this one because we're always doing that, right? We're always looking at these charts and wishing we got into something. And I could say, okay, if I had gotten in, let's zoom down to the 3-minute chart or the 1-minute chart or whatever and say, say I'd had an alert here. Say I'd had a stop limit here. Would I have gotten in with that. And among other things, that's not the only thing I'd be looking for, but that's one of the things I could be looking for to kind of address this critical problem, which is, okay, great. I've got some great frames. I've got some great ideas, but did I get in? Because I got to get in. When it triggers, not miss it. So that's where I got with the exercise, and pleasure to review it today because it reminds me I still need to put a little of extra telemetry into my spreadsheet of closed trades. Aho.
Well, I'll go next, and we'll let Ken be our closer today. So thinking about the helicopter and how long it took to make a helicopter viable, 400 and some years from concept to actual implementation, makes me realize that this transition, it's taking me some time to go through transition from concept of what I could be doing as a professional trader to where am I actually in that journey of mastery. So it's taking some time, and what I'm realizing I need to focus on is the learning and then the application, and taking the learning and putting it into application. So I'm in the process of digesting all I can learn from my trading this last year, and combination of about 2,300 day trades and 120 some swing trades, and both have rich sources of insight and a lot of experiments and a lot of setbacks. So just trying to extract the nuggets and say, okay, what are the nuggets from this last year and all those trades? Both things I captured in my logs and things I didn't capture in my logs and journal, and what is it I'm going to put into practice for this next year to continue to refine and hone and improve, with the idea that that's the journey, and it's as I've been revisiting the pursuit of mastery, it's a recognition that it's a goalless journey. It's the development of the practice and the refinement of the practice. And so the first very clear standout is taking losses that are greater than 1R. And I've started tracking that on every trade and measuring it now so that I can measure it in what I call my excess R loss, so I can keep track of that, because just eliminating that excess R loss would significantly improve my results. So that was one aha. And so now it's working with my nervous system. So I realized this about 3 months ago, and it's been working with my nervous system on how do I adjust and what are the reasons why I end up taking. What's going on? What's the thought process? What's going on emotionally? What's going on in my nervous system that leads me to not exit at the point I would want to exit, or even before. So discovering what that is and working to shift. So now I'm working with changing the boundaries of homeostasis, what I've been used to doing in my mind and body for 62 years. Now I need to move that to a different way of behaving. and there's resistance. The unconscious part of my processing is resisting some of that. So I'm working on how do I deal with that. The other major area is the majority of my wins, or the majority of the net gains, are all on the short side. So I have this short bias, and I'm not getting the gains, and I'm not getting the rebounds, even though it's been mostly a bear to sideways market since February. There's been at least 2 good 6-week stretches of rebounds. July into August, and October into November, and I did not see those gains. In fact, I was doubling down and doing more trades on the short side when the market conditions had shifted. So just watching this week, the R slope indicator and the value of the R30 slope indicator, it's like, okay, there's another piece to the puzzle to be able to incorporate in. I've also, this year, I experimented with 1 minute to 30-minute charts, and I'm beginning to settle in on 3-minute is the effective, more effective 3 to 5, although 1 minute can be useful in helping my firemen get to break even plus dinner for 2, but not the one to be using for entries and allowing some space for growth after break even plus dinner for 2. So just seeing where the value in different time frames are on charts, and seeing where am I taking the excess R loss. So the excess R loss can be when very clearly when I've taken a larger position size than my normal standard entry of 400 shares with a dollar risk. So there's a position risk of $400. But when I increase that position size, because I think I can keep my loss to less, I'm more likely to have this ownership endowment bias, and more likely to want to give it more room, and more likely to end up taking a greater than 1 R loss. So those are 3 different dynamics that are kind of popping up, that now it's going into this new year. How to put those ahas into practice, and how to continue to improve my log and tracking of the things that I want to be able to step back and assess next year. And as I've been starting to go through, Ken gave a list of about 70 things that a professional trader would be at a score of 80% or higher on those 70 things. So I haven't completed my first thorough assessment, but I already know there are a handful of those where I'm well below 80. So I feel like, okay, I'm at the apprenticeship stage, apprenticing to learn the basics, working toward how I can become a good journeyman repeatedly. So discipline is really important for me to be focusing on, and impulse control. So the impulse control to remove a stop, or to let the stop go beyond 1 R loss. The zero state, being able to return to the zero state and notice when I'm not in the zero state are really critical capacities, because when I'm not in the zero state is when I do the things that that get in my way of mastery. So those are the ahas that have come to light for me. And what I really appreciate is having experimented and having done a lot of trades and being able to look back and assess. Now, I also realized that some of the richness of the assessment was lost as I was trying to recreate the trades and what I actually did, because I hadn't captured them and done my Snagit capture of entries, exits at the time. And so going back in TC 2000, I realized, oh, May 4th. Well, May 4th, all I can get is hourly granularity on the chart. I can't get the 10-minute granularity that I was actually operating from when I did that trade. And still, it's very clear on the hourly chart that wasn't, I was not practicing any of the methods, patterns, and professionalism in that trade. So it's useful to even just go back and see at that level of granularity and be able to accept, oh, that's what I created, and what I want to create is very different this next year. And how do I put those simple things I'm discovering into practice with greater discipline, with a quicker return to the zero state when I get knocked off balance, and with a better understanding of the impulses as they arise and separating the impulse awareness from the actual following through of it. So, aha.
Well, excuse me. Here are mine. Here's a thought experiment. Put yourself into a fact-finding mode, and you're going to a meeting of 10 other traders who are going to tell you about their systems. As a result of taking this course and the way you're thinking now, what are the list of questions that you're going to ask about that trade? You're going to listen to their story, and they're going to tell you stories about their trading the way traders typically tell their stories. So what are the things that you're listening for that will rapidly determine if that system could work for you? You're checking resonance. So in my view, the things that it turns out that you ask are connected to the things that you apparently think are really, really important. So if you assume that the trading system they're going to tell you about has positive features, does that even matter to you? Or are it the things that are unsaid that you want to know? Well, what if the person who told you the story of their trading system checked all your boxes and you had no other questions? Is that a situation where you say, well, I'm ready to trade it now, today, right now, going forward? How would you put that into implementation if you found yourself in that condition? So try that theater of mind exercise. And then use that as a lens to look back at yourself and say, where did those questions come from? And why do those seem to be important? And is that what I thought was important a year ago? I mean, all the way last year when we started this course, I'll get to say that now, being January 1st. What is becoming important? I would remind us that each of the course lessons, and you demonstrated today, are a chunk of our creativity body of knowledge to be revisited at our leisure and priority on our individual journey up and down and all around the mountain. And when you do that, you're coming back to the fire to tell the story to others. And so one of the things that distinguishes a community of practice from a group of people assembled together is the sense of kind of the cover charge. What's the cover charge that I'm willing to pay to be a member of that club? Or what is my obligation? And when I say the cover charge that I'm going to pay, it's the thing that I have to do to be able to get through the door. And in this case, it's probably bringing the story of your true reflection in is sort of it's a self-input. Now, we've said from the beginning, you never ever have to talk, but we always have. So that's a self-imposed tax because it feels correct. So how does the fact that you know that you're going to tell a story about what it is that you're about to do positively affect the way you're going to go about the conduct of the trade? You say, look, there I am. I have this impulse to trade, but I know that I'm going to write it down and talk about it no matter what. What's the impact of the commitment to that, as opposed to a almost value neutral or self-centered value of, hey, I'm going to follow the rules because I made a checklist and I want to score well on my own checklist. But no, the commitment you make to the group of storytellers around the circle is to strive to be your better self. And so there's a certain edge in living in a community of practice that inspires you, motivates you, gives you the energy to be your better self. So how important is that in the moment? Does that become part of a moment of reflection? Maybe if you hit a tone, you say, oh, that tone is the same tone that we use around the True Story Circle when I'm about to tell my story. If I hit that tone, does that trigger in me the increase in self-discipline to be able to just follow the rules that I said I was going to? Is that a way to measure readiness to trade? If I could convert all of that, the prep steps that I say I'm going to do, into the tone of the bell, it's sort of a physical acknowledgement to the universe that I declare that I'm ready to trade according to my rules. So don't falsely hit the tone. So I started thinking about all of that as the tribe of mountain climbers operating in and out of a dojo and a base camp. So it turns out the dojo is one of the components of a base camp, but the base camp is that place where you kind of bring wholesale purpose and intention and establish a base of operations. And sometimes you're going to do this, and sometimes you're going to do that. And all of those things are activities that can be performed in a base camp. And when you're performing a particular activity in the base camp, whether it's cooking, cleaning, resting, reading, reflecting, writing, exercising, recreation, each one of those is its own little subset purpose that when you're doing that thing, that's what you should be doing. And you can do that inside the base camp. Well, rehearsing and working inside the dojo is one of the things that goes on in the base camp, but it's not the only thing. You don't want to overtrain. So if you keep that image in mind of the base camp at the foot of the mountain as a place to bring the wholesale resources and then operate from there in all of the ways that we need to be better. Then I started thinking about Sherpas, load carriers, guides, examples of excellence and commitment and lifestyle as an inspiration that we remember Sir Edmund Hillary, but really it's Tenzing Norgay. That's the guy. And how those folks do their things. I'm sniffing around, reading up, dabbling on Sherpa culture and history. Thinking about how to increase expectunity. Well, I can increase the expectancy, and I can increase the number of opportunities, and I'm going to find that balancing point. So I'm probably working on both sides of that teeter-totter to achieve the right level of adaptive balance. Maybe that's a function of market condition too. What should I be working on next? Well, how is it doing? If the system expectancy is excellent, then I need more opportunities. If the opportunities are excellent, but the expectancy is not there, maybe I need to be working on the things that are contributing to lower expectancy, or widen the herd, maybe shift to the west a little bit, crop rotation. So I can change the herd, I can change the rules, I can change the arbitrary numerical limit of positions I can hold open at a time. I can affect that number as a function of how many can I successfully juggle, and how big are the things that I'm juggling, and how soft are they. So if I dropped a beanbag, it doesn't have the same effect as dropping a glass ball. So how do I think about expectunity as a juggling enterprise? I like the thoughts about the impact of combining multiple time frames and why you must be prepared to strike, because the breaks in compound critical states happen very fast. And so the idea of having stop limit orders in there and alerts affects my ability to rapidly get in tune with that decision making. And I was thinking about the same way that the drummer counts in the band at the start. 1, 2, 3, 4. We should be able to be that fast. You know, the 4 beats define the rhythm, and 1, 2, 3, boom. So how quickly can I get into that? What is my process to get into that? You know, listening to Bill Scheit's drumming, the little 6-beat entry for all of the West African drummings instantly tells you when the song is ready to start and when it's over. What does the rule of limiting open positions protect you from? Are there other ways to accomplish the purpose? If it is to protect me against ever having more than X amount of open risk, that has to do with the size of the risk that you're taking on the trade, and therefore the number of trades. What was the limiting factor in the number of trades? The number that you could successfully manage, or was the fact that it exceeded the momentary limit of risk? Hey, I'm only going to have $500 of open risk, and my risk per trade is 250. Therefore, I can only have 2 open trades. Was it because I could only manage 2 at a time? Or was it because I had chosen 250 as the risk box and 500 as my maximum open risk, and that's what kept me from taking more trades or looking for more trades, or kept me locked into only managing 2 at a time? So I want to know what, as I reduce the risk box, what does that do to my span of control? There is some level of non-zero risk that my ability to juggle safely is at a natural limit. So you want to know what that number is, and then figure out what the relationship between that number of arbitrary juggling limit versus the dollars at risk. I'm always learning this lesson. It's easier to change the purpose of the trade than it is to just take the loss. I mean, I mess around with this so goddamn much. That is a particular problem when you are a multiple time frame trader. And so you just got to be really clear about that. Say, hey, well, that's what I'm doing. hey, this thing is now a hourly trade and a swing trade, and I'm widening the stop. Well, if you're always hybrid trading and it's within a certain range, as long as the risk that you have on that trade is there, then that's still legitimate. If I'm starting the trade with the core position, but not the full load on the core position, it might be the same. I have a certain number of shares, but so anyway, that seems to be that's my central issue to contend with is how easily I can convert one trade idea to it. What is this? What is the identity of this trade? What is its nameplate? The purpose of this trade is to what? Get a 0.2 of my swing trade on with a tight stop? Or is it to try to get a really good day trade or an intraday trade going, and then I don't want to exit, so I turn it into a swing trade? Maybe I can do that by just selling 80%, and that still allows you to make that shift quickly and properly, but it should be intentional, and you should be not bullshitting, Kenneth, on what it is that you're doing. Finally, in the same way that the alerts Dan talked about were a way, that's like a half step towards having the stop limit order in place. It has everything that a stop limit does except for the commitment of dollars in the moment. So if you can have a quick drumming count in for that sound, the alert says, hey, get ready to play this song, trigger. Check it real quick. 1, 2, 3, go. Maybe that's all. That's the difference between the stop limit and the alert. And it probably, on a very liquid stock, it probably doesn't really affect your entry much by the time what your fill is, because you're hitting a market order now instead of waiting for your stop limit to fill after all the other market orders are processed. So, I'll just go back to the first idea. What questions do you ask of a trader who just got done telling you about their trading system story? And what are the triggers that those questions represent? How do the concerns or the fear or the greed or the emotions that are associated with why was that an important question? There's some emotional connection in there to some event or some that happened or some imagined event that might happen. And what's important about that emotion? What is the alert to try to protect you against having to feel that emotion because you have a rule that kept you out of that situation? Or is it the alert that's a trigger to tell you, hey, I want to go have that emotional feeling about this trade? So it's a positive emotion that's pulling me into the trade. Or is it a negative emotion that has a rule that's protecting me against that kind of trade? What are those questions coming from? What are the emotional touch points, and why are they important? Hey, Tom, can you send me back that list of 70 indicators? I remember writing it down one time, but I'm not sure. I don't know wherever I put it.
It's in Patreon. I'll send it.
Okay, yeah. If
I'll
you
send
wouldn't
one,
mind
yeah.
sending me the link.
Yep.
I wanted to write more on that for the book. All right, that's everything I got there. Aho.
All right. I will ring the chimes one more time and be thinking about your word for today that you want to carry forward. And I'll go around the screen and ask in the order I see you. Chunlong.
SWOT is an acronym. strengths, weakness, opportunities, or stuff. So what?
Kuhn,
Helicopter.
Ernie,
Renewal.
Dan,
Helicopter.
Ken,
Sherpa.
and my word is clarity. Again, from last time. Yeah. Well, I will ring the chimes one more time, and then we'll go into our coffee talk portion. Happy New Year to all of you. It's good to see you, and good to see you joining us, Dan.
Thank
Thank
you.
you. Happy New Year.
Yeah, Happy New Year to all. Welcome, Dan.
I would ask Ken, what is the plan after lesson 30?
You're on
You're
mute.
still on mute, Ken.
Still on mute.
I'm thinking of the, the base camp idea. And there's really two ways. I got to think about how to run this course fresh from the start. For the next cohort, but at the same time maintaining the base camp meeting for experienced climbers. And so I think what I'm actually thinking of is I kind of like the combination of Sunday and Monday timings, and I could imagine how we have a session like this where the white belts come in for the specific lesson that they're working on and tell their story, and then the higher level belts, you guys are purple belt, brown belts, tell their story from the particular lesson that they happen to work on that week, as an example of second level or meta loop learning. And you'll find a way to quickly tell that story. Hey, I was working on this feature, and my reflection this week was as so. In a way that is respectful to the white belts, but also contributes, but allows you to kind of painlessly revisit the course systematically, because you'll be hearing them talking about the particular lesson that I remember what it was like learning to tie knots. And I remember what it was like learning how to pack my backpack. And I remember what it was like learning how to care for my feet before the climb and care for my equipment after the climb. And so there's a certain periodicity of the 70 things. But then there's also your own particular work in progress. So in my view, there would be a real strong value to do it that way. It would reinforce the idea of the base camp mentality, at the same time respecting the next cohort's efforts, but also giving us a way to maintain the momentum and continue on. I think that's really healthy. It doesn't preclude us from doing other focused training if you want, but I think I would open that up. The foundations base camp, base camp 1 and base camp 2. So base camp 1 would be where the white belts are gathering and learning basic mountaineering skills on the bunny slopes, going through the 70 things. But then also maintaining the momentum that we have. And it may be in the future, like I mean, I'm in a discussion with Chris White of EdgeRaider, who makes Excel based tools that look a lot like the kinds of tools that I make, and he's got I don't know how many subscribers, but he makes a living at it. And his spider sense is that his followers, his customers, his clients are in real need of the kinds of education and training that we do. Like, he's a tool maker, but he also recognizes that people need a workspace to work out in and to do their craftsmanship. So the short answer on all this, I think, is I think I'm going to maintain the Sunday morning, Monday evening discipline for this course, and just have that open to you to attend and just keep doing the work in public. That's your cover charge, is to be a good example. That's what it'll cost you. Be a good example. That's a high price to pay. It's easier to spend money and then not have to do the work. But I suppose I should also say, hey, if you'd like to participate but not do the work, then I'll charge you as a baggage handler, as a commercial carrier, you know. And then we can decide later if you want to do other coaching. At some point, I need to get off right now, but I think that's what I would do. I think the Sunday and Monday, I'm just going to lock that in and say that's how we're going to do it, and that allows me to harmonize the different interests of white belts who need more of a structured approach, and the higher level belts who can be self-directed. And that gets back to the point where we were talking about what do we do after lesson 30 or whatever it is. And there's the 10 myths. Well, that's sort of like the halfway house, because what I'm asking you to do on those 10 weeks of lessons is really just read that as a seed to get you started, but then go back and work on the things from your notes from this course and come in and tell the story just to us. That's kind of like a living example of what I would sort of expect you to be able to do when the white belts come in and say, hey, I've been there, done that. And you'll end up probably being a source of comfort and inspiration to others. You say, hey, I remember when I was in that position, or here's what I discovered later. That'll be performing a real service to that group. So does that sort of answer the question? Let's just keep planning on, Sundays and Mondays, just keep reporting on your work in progress.
For me, this session related to some more psychological connection with the outside world. I'm not retired. I don't think I'm retired, but I'm actually stay home every day. As a INTJ, I don't have much connection with outside world. So I really want to have a kind of connection. It doesn't matter what the content is. Connect to traders, professional traders. I think is really important for me. I don't care much about the content, what we do. I just need the connection.
Yeah.
That's why I'm asking.
Well, that's why I think the base camp model of the story time around the fire is the thing that connects all of those individual. If you think about all the other rooms or activities in the base camp, mostly those are individual efforts or maybe small partnering, to work on that exercise. But it's that the common area around the fire where the stories are told in a purposeful way is what connects all those things in a really important way that inspires you to do your best work. So I think that was an important insight for me from this week, was thinking it sort of just jumped into my head like, oh well, obviously that's the way to do it. So let's plan on doing it that way then, and then we'll blame you for bringing it up.
Sorry.
Thank you. I think that's an incredible resource to be able to keep checking in. Much like the True Storytelling Circle you started on Saturdays, it's been going for 3 years. I have a mastermind group with some colleagues that I went through coach training program with, and we're on year 8 or 9 of meeting monthly, and that's an incredible resource to stay connected.
Yeah. Well, I mean, and some of the other guys, I think, like Jeff and Glenn are interested in coaching, specifically being trading coaches, and so this gives a forum to be able for them to be able to do that, because as you already showed, we can any of us, all of us, could run this session as a facilitator, and so that actually adds more flexibility downstream for all of us too. Well, it doesn't have to be like, hey, for 50 weeks I'm going to do it. No, I'm going to run a session with a group of interested people or whatever, and it also gives you a way to work with your own accountability partner if this is a way to do that. So yeah.
I was really intrigued, Tom, when you talked about the being in a trade, like a 3-minute, and then all of a sudden you switch to 1 minute, and then varying it in the same trade. That was, I mean, I know we kind of do that in a way. You may start out as a day trade and it turns into a swing trade, but that was fascinating to listen to you talk about that you would switch even 3-minute to 1 minute. That was intriguing.
Yeah, I find there are certain times a day where that may be useful. So the opening 30 minutes, right?
Yeah.
Right. I might get an opening range 3 that says go, but the likelihood of a reversal after the first 30 minutes is greater probability, and so I can use the 1 minute to pick okay, I'm going to move to a break-even plus dinner for 2 stop sooner than the 3-minute might indicate to me. So it's an experiment. It's where I'm at.
And I really like the idea what Ken just put into the chat, that it's easier to change the purpose of the trade than it is to just take the loss. I catch myself. I think I use that as an excuse, and I'm really going to try to. I'm going to work on that. I think there's a lot in that when you wrote that down. That's fascinating.
That's how I make my big loss. Always.
Yes.
If you look at one of the swing frames I put up, you'll see a classic example of that. Maybe you're familiar with a stock called Rivian for the electric car maker. Been in a real leg down, and I got on that leg down fairly high up, the most recent one. But I went in and day traded my swing trade 2 days later, and I was profitable on it already. But because I was day trading it, I thought, I got a really good stop here, on the 3-minute chart. It's kind of a good hourly stop too, in a way. And so I moved my stop down there and ended up with a 1.38R trade. But the thing went on for another 3R after that, and I guess, and I could have. So that's an example of switching time frames. I like your OR3 example, though, Tom. I think that kind of makes sense, because with the OR3, you need to get the no lose plus dinner for two stop in there pretty fast, and you might just be better taking it, in one of these 1 hour bars going up. I don't know. So I think the 1 minute that might work.
Well, maybe we do checkouts.
Yep. Yep. I'm ready to head upstairs, got a little bit of cleanup to do from last night. We used London Standard Time to celebrate our New Year, so we weren't up till midnight. If I'm being honest. All right, so I'm all good here in Kansas, and looking forward to a good week ahead. I hope.
Me too. Looking forward to a great new year with everybody. Thank you guys for everything. Happy New Year. Aho.
Happy New Year. I hope.
Happy New Year to you all. I'm ready to work on some of my New Year's resolutions and get some lunch. I hope.
Yeah, Happy New Year, and the pizza has arrived. So and my sons have got his friends around. So ready to go. Have a good week, good year.
All right. Well,
Bye-bye, everybody.
wrap it
Bye-bye.
all
Bye.
up. Have Happy New Year. See you next week.
See you next week.
See you.
When you get a chance, just send me the link